Hello and welcome to another session of the My Solo 401k Financial Weekly YouTube series. Thank you so much for joining. We're about to get started. So if you're on YouTube, please feel free to like and subscribe. We would really appreciate that. And that'll get you notifications of all the upcoming webinars, access to the recordings. If you're also live here on YouTube, you can certainly ask comments. Or if you're on the StreamYard, you can ask comments. If you're watching on recording, you can post comments in the post your questions in the comments on YouTube, and we respond to those in the YouTube comments as well. So today's topic is a very common question that comes up with clients as we're onboarding them, etc., as they are trying to decide where to open their account for their solo 401k. And so we're totally neutral on where the account is opened up. We've helped clients open up accounts at hundreds of different banks and many different brokerages. So some of the top brokerage options are Fidelity and Schwab. Two of the top options are Fidelity and Schwab. So really the point of this session is to go over some of the similarities as well as the differences between opening your brokerage account or the brokerage account for your solo 401k plan with us at either Fidelity versus Schwab. So which is the best brokerage account option, in other words, for your self-directed solo 401k. So as always, the presentation is being provided for educational purposes only. It should not be construed as tax, legal, or investment advice, nor as a solicitation. When making an investment decision, please consult with your tax attorney and financial professional. We would encourage you to subscribe to the YouTube channel as we, as mentioned, host these weekly webinars. Some of the past topics recently have been how much income I would need to maximize contributions. You can think of that as the magic number of income in order to be able to maximize contributions. We've also, of course, been discussing the fact that Vanguard recently decided to exit the solo 401k business. We've also gone over comparing setting up a solo 401k at Fidelity or Schwab, in other words, at the discount brokerages, a quote unquote free solo 401k versus setting up a solo 401k through us, but having your accounts at Fidelity and Schwab, which is the natural follow-up to that discussion, which would be today's discussion, talking about opening up the accounts at Fidelity versus Schwab for your solo 401k plan that we provide. Solo 401k payroll integrations is a topic that's going to be coming up here in a future session. Another future session would be a deep dive on the distribution rules, A to Z. Another recent session we hosted was a deep dive on the loan rules. So you can find all these webinars, of course, on the YouTube channel, and you subscribe, you get notifications of the sessions, you get access to the recordings. So as far as the agenda for today, we want to start out by talking about, of course, eligibility. So people, of course, understand what it takes to be eligible to set up a solo 401k. Some of the top benefits and features, which will naturally lead into, okay, well, what are the top use cases? As part of the establishment process, you would need an account for your solo 401k. And as mentioned, the top brokerage account options are Fidelity and Schwab. So we want to take the time today to really break down the similarities, the differences, so you can decide, okay, well, what's the best brokerage account for my self-directed solo 401k? And then, of course, we want to highlight just, go over your questions, go over resources. So we do host a daily Zoom call on our community. We come to YouTube typically on Fridays to have the session with more prepared content like it is today. But during the week, we're hosting more office hour type sessions. It's totally free. All are welcome. We host it on mysolo401k.net/my community. So it's a great way to just learn, to come and ask a question, to learn from what others are asking, etc. In addition to that, we have forums, we have a library of videos and webinars on the community. So there's a lot of great ways to learn, and to share the knowledge. So as far as that basic concept, right, who's eligible to set up a solo 401k? Well, you have to be self-employed, right? So it has to be an owner-only business. In other words, a self-employed business with no full-time W-2 employees. Now, the individual could have a spouse that's working in the business, and that wouldn't prevent the individual from being able to set up a solo 401k, but it would need to be a business that doesn't have any non-owner, non-spouse, full-time W-2 employees. And so, of course, you also have to be self-employed. So that really could be a range of things, right? It could be a consultant, it could be a personal trainer, you could be an attorney, a CPA. Digging into some of the eligibility considerations would be the questions that are listed here on this page, right? Do I need a separate entity? The answer is no. We have many clients who operate without a formal legal entity. They might be sole proprietors, right? Ultimately, you need to have earned self-employment income that you report on your taxes. For example, on Schedule C for a business that is taxed as a sole proprietorship, or a single member LLC that's taxed as a sole proprietorship, or W-2 wages. For example, if your business is taxed as an S Corp. There's no minimum amount of earned self-employment income that you need to report in order to be eligible to set up a plan. Your spouse or business partner could also participate, as long as your spouse or business partner is reporting their own earned self-employment income. You can have a solo 401k, even if you have a W-2 day job. Again, as long as you report that earned self-employment income. And that would even include even if you participate in your W-2 employer-sponsored plan, so your day job 401k. You could still set up a solo 401k based on separate side self-employment activity. So why open a solo 401k with us, with My Solo 401k Financial? Well, our plan is going to give you maximum control, maximum flexibility, maximum features that are allowed under the rules. So for example, you have checkbook control, you have wire control, you can make all types of contributions that are allowed under the rules. You can take a loan, and we prepare the documents to create the plan within the same day. So digging into some of those features, one feature that's highly important to our customers is the ability to invest in alternative investments. And so when we say alternative investments, we really mean true alternative investments like physical real estate, notes, precious metals like gold, Bitcoin, cryptocurrency, private placements, etc. And as part of the onboarding process, we're helping customers open up accounts at the bank or brokerage of choice where they have checkbook control. And we'll talk about more what that means with respect to Fidelity and Schwab here in a moment. But continuing on was laying the foundation of understanding, the features of our plan. Another very important feature is the fact that our plan allows for all types of contributions, whether it's employee versus employer, whether it's pre-tax, Roth, or after-tax. As a matter of fact, the solo 401k has the highest contribution limits for any defined contribution plan available to self-employed individuals. Another important feature is the fact that our plan allows for participant loans. So this is where you could literally borrow money out of your 401k account, and it's not going to be considered a taxable distribution as long as it's properly documented as a loan, which we handle the loan documentation requirements as part of our service for no additional charge, and paid back according to the payment schedule. So the payment terms would be monthly or quarterly payments, equal payments of principal and interest. The interest is prime plus 1%, or it could be a CD rate plus 2%, with those payments spread out over a 5-year term. And the proceeds of that loan could be used for any purpose whatsoever. Consolidation. So our plan would allow you to transfer money from a former employer plan, right? This could be a range of former employer plans, TSP, 401k, defined benefit, as well as traditional IRAs. Now, the rules would not allow you to transfer after-tax money in an IRA or Roth money in an IRA to any type of 401k, including a solo 401k, but you could transfer pre-tax money from an IRA. You could also even transfer Roth money in a 401k. So if it's Roth money in a former employer plan, that could also be transferred over. And we have helped clients transfer funds from hundreds of different financial institutions. So we've tracked all that experience, that knowledge, to make it easy for you, right? We have experience with the forms, et cetera. We can leverage all that experience to make it easy going forward for existing or new clients. As mentioned, one of the top reasons that clients set up accounts with us is the ability to invest in alternative investments. One of the most popular alternative investment that our clients are investing in would be physical real estate. So like, for example, a rental real estate property. So it is possible to use your solo 401k funds along with a mortgage to invest in real estate, provided that it's a special type of financing called non-recourse financing. So there are specialty lenders that will lend funds to individuals' retirement accounts to invest in real estate. So under the rules, if someone were to make that debt finance real estate investment inside of an IRA, the income attributable to that investment would be subject to a special tax payable by the IRA called UDFI, or unrelated debt finance income tax. However, there's an exception to that UDFI tax that applies to income from debt finance real estate that's owned by a 401k. So that solo 401k UDFI exception would be especially advantageous to someone that's looking to use debt along with their retirement money to invest in real estate. So we're totally neutral as far as where the accounts are at. As mentioned, we've helped clients open up accounts at hundreds of different banks, many different brokerages. Now, we are very hands-on in helping clients open up accounts. For example, we are preparing the paperwork to open up accounts at the bank or brokerage of choice, to make it easy and to ensure that things are done in a compliant fashion in accordance with the solo 401k rules. Our plan would allow for conversions. In addition, we provide the ongoing compliance support that would be required when someone is making a conversion. So there are two types of conversions that our clients will make. One would be to transfer money from a pre-tax solo 401k account to a Roth solo 401k account. So this is taking tax deductible money that's in your solo 401k, right? In a traditional money that's in your solo 401k that you want to convert to a Roth status so that the subsequent gains have that potential for tax-free growth. So when the individual converts from a pre-tax status to a Roth status, that number one, of course, is going to be taxable for the year of the conversion. It's also going to be reportable on a 1099-R. So we handle the 1099-R reporting as an optional free service. In other words, no additional charge. There's a form on our website that clients can use 24/7 to provide us the information that's needed to get their plan in the queue to have that 1099-R prepared. The second type of conversion that our clients process would be transferring funds from an after-tax solo 401k to a Roth solo 401k. And that is how one makes a mega backdoor Roth solo 401k contribution. It's a two-step process. The individual would first deposit the money into the after-tax solo 401k account before it gets moved over to the Roth solo 401k account or a Roth IRA. In either case, when the money is moved from the after-tax solo 401k account to the Roth IRA or Roth 401k, that transfer is going to be reportable on a 1099-R. And as noted for the in-plan conversion, or likewise for the mega backdoor Roth conversion, we handle the 1099-R reporting as an optional free service. In other words, no additional charge for our customers. Again, there's just an online form that clients would use to let us know the information that's needed so we can prepare that 1099-R. $1,500 solo 401k tax credit. So our plan is going to include the automatic contribution feature. So all new plans, as well as clients that have existing solo 401k plans somewhere else that upgrade their plan to our plan, we will automatically include the automatic contribution feature, the notices, everything that's needed to make the self-employed individual eligible to start claiming a $500 per year tax credit for a total of 3 consecutive years for a total of $1,500. So in short, our plan would make the individual eligible for a $1,500 tax credit, which is going to more than offset the cost to set up and maintain the plan for the first 7 years. And along with all those features, we provide tremendous support, whether it's the compliance support, like the loan preparation documents, or the 1099-R preparation, or the Form 5500EZ that we handle via the electronic filing system, as well as just the mechanics of opening accounts, doing rollovers, And finally, just educating clients on the rules, whether it's understanding how much they can contribute or understanding how they invest in real estate, etc. And that's all covered and included for the flat $125 annual per year fee. And that's per plan. So even if someone has multiple participants in their solo 401k, it's only going to be $125 per plan. So why open a solo 401k? Well, number one, you've got the frugal investor. So as mentioned, our plan is going to make the self-employed individual eligible for $1,500 in tax credits, which is going to more than offset the cost to set up and maintain a plan with us for the first 7 years. So our fees are $650, which includes the $525 establishment fee plus the first $125 annual fee. So on the anniversary date, in other words, 12 months later, the $125 annual fee would be due. So that $1,500 is going to more than cover those costs over the first 7 years. Moreover, our fees can be paid with non-retirement funds to preserve the retirement account balance. The Roth Maximizer. So our plan is going to allow for not only pre-tax contributions, but also Roth and even voluntary after-tax contributions, which is how one makes mega backdoor Roth contributions. So with our plan, if someone has the self-employment income to justify it, they would be able to contribute as much as $69,000 or even $76,500 if they're 50 or older for 2024. And that could end up in their Roth account if they're, for example, making a mega backdoor Roth contribution. Secondly, if someone is looking to transfer funds from their pre-tax solo 401k account to their Roth solo 401k account, our plan would allow it, number one. Number two, we provide the required compliance support. In other words, the 1099-R preparation and filing. So that can be highly important to someone that might be prompted by their tax advisor or their financial planner in a year when their income is low to move money from their pre-tax account to their Roth account. Because if they're in a lower income tax bracket, then they would just pay taxes during that year on the amount that's moved from the pre-tax account to the Roth account. And then they would have the potential for tax-free growth with respect to all the gains on that money that's now in the Roth account. Another top use case is the large account holder. So for someone that has a value in their plan, right, across all the different sub-accounts, it could be different participants, like say if there's two spouses participating in the same solo 401k plan, or different account types, right, like pre-tax versus Roth. So if the sum of those account balances, including any alternative investment values, et cetera, exceeds $250,000, there's an annual informational tax return filing requirement. So that informational tax return is called a Form 5500 EZ, which we handle as part of our service for no additional charge. It's an optional free service. We also prepare it so that it's filed under the electronic filing system, the EFAS system, just to make it easy for all parties. The large account holder is now the alternative investor. So one of the top reasons the clients set up accounts with us is that our plan not only allows someone to invest in traditional brokerage type investments like mutual funds, stocks, bonds, etc., but also those alternative investments that we mentioned up above, like real estate, private placements, syndications, cryptocurrency, etc. The rainy day investor. So our plan is going to allow someone to borrow, right? So if there's an emergency, they need money from their solo 401k account, that individual will be able to borrow up to 50% of the balance, not to exceed $50,000. And that's per participant. And that's not going to be considered a taxable event. It's as long as it's properly documented as a loan, which we handle that loan documentation requirement within 1 business day, as well as paid back according to the payment schedule. Okay, so now let's start to dig into some of the features of the Fidelity account versus the Schwab account. So just to be clear, this is someone that would have a solo 401k plan that we provide, and then they're opening the account for the solo 401k plan that we provide at Fidelity versus Schwab. Now, as part of the onboarding process, we help clients open up accounts at the brokerage of choice. So for example, we would pre-fill the paperwork that Fidelity would require or that Schwab would require to open up a brokerage account for their plan that's provided by us. So which is the best option? right, for your self-directed account with your self-directed solo 401k with Checkbook Control. So here are some of the top considerations. So number one, Checkbook Control, wire control. So each of these companies, Fidelity and Schwab, is going to provide a free checkbook associated with the free brokerage account, right? In each case, they don't charge anything to open the account. There's no maintenance fee. There's free online trading, etc. So this can be very important for our solo 401k clients that want to invest in alternative investments, right? Because they can write a check to make that investment. They could wire money out of the account to make that investment. They could also use that as a way to fund their 401k participant loan, right? If they're taking an emergency loan from their 401k, they can write a check out of their brokerage account at Fidelity or Schwab to fund that loan. Next consideration would be equity investments, futures, and options. So even though many clients do invest in alternative investments, there are still many that will prefer to invest in brokerage type investments, or maybe they want to have both. So in order to invest in that type of investment, you need a brokerage account. So certainly these brokerage accounts at Fidelity and Schwab are going to allow for a wide range of brokerage type investments, whether it's stocks, bonds, mutual funds, index funds, etc., ETFs. So it's going to track or parallel an IRA account at Fidelity or Schwab, respectively. So alternative investments. So even though the accounts are at the brokerage firm, Fidelity or Schwab, the plan is provided by us. So the plan is what dictates what the solo 401k owner can invest in. And because our IRS approved plan would allow for those alternative investments like real estate, like private placements, promissory notes, etc., even though the account is at Fidelity and Schwab, that individual could still invest in those types of investments because the documents which govern what they can invest in are provided by us, and our documents allow for those types of investments. Now, let's talk about contributions. Firstly, you have pre-tax employee contributions, also referred to as salary deferral. So we would prepare the paperwork to open up the accounts at Fidelity or Schwab, right, at the bank or brokerage of choice. And so if someone's going to have different types of contributions, like say pre-tax versus Roth versus after-tax, we would ask if the individual is looking to make those types of contributions when they let us know they want to have, say, Fidelity versus Schwab, and then we would prepare the paperwork to open the requisite number of accounts. Because from a solo 401k perspective, those different types of funds need to be held in different accounts. So even though the accounts are at Fidelity and Schwab and they don't allow for, with their own plan, right, they're not going to allow for mega backdoor Roth. Now, Schwab does allow for Roth. We talked about that in the recent deep dive webinar we had last week. But Fidelity doesn't even allow for Roth. They only allow for pre-tax. But neither of them allow for mega backdoor Roth. So again, because our plan allows for Roth, employer Roth, voluntary after-tax, which is how you make mega backdoor Roth, that's what governs the accounts. Fidelity and Schwab will both open up multiple accounts for the same plan. So there might be 6 accounts, right? If it's a husband and wife, both working in the same business, both participating in the same plan, and both wanting pre-tax, Roth, and after-tax accounts at Fidelity and Schwab, or Schwab. Now, so of course you can make pre-tax employee, you can make voluntary after-tax, you can make employer pre-tax, you can make employer Roth, right? Our plan allows for that. And then of course you can make employee Roth. So we are, again, preparing the paperwork that's needed to open the requisite number of accounts. We're answering questions every day in terms of the mechanics of making contributions, how much the person could make, right? We're educating them on the rules based on their situation, etc. So solo 401k loan. So even though Fidelity and Schwab's basic solo 401k plan that they offer, where the individual would be using, say, the Fidelity documents or the Schwab documents, as well as having their account at Fidelity and Schwab, their plans don't allow for solo 401k loans. Our plans do, right? Our plan documents do allow for loans, and that's what governs the accounts. So Fidelity and Schwab, they'll open up accounts for a third-party plan, and we prepare the paperwork to open up those requisite accounts. So in either case, the individual can have the plan with us that allows for the 401k loan. When they're ready to take the loan, we prepare the required loan documents, but still have their accounts at Fidelity versus Schwab. So in either case, you could still have the accounts there, but have a plan like ours that allows for taking a solo 401k loan. You are the solo 401k trustee. Only you, as the solo 401k owner, has access to the accounts. So even though we're very hands-on in preparing the paperwork to open up the requisite accounts, we never have access to your account. Only you can place the investments. Only you have access to the funds. The Form 1099-R and Form 5500-EZ reporting. So Fidelity, Schwab, their role is to merely provide the account. So it's not their plan document that dictates the account. They're not providing the compliance support for the plan. We provide the compliance support. And we do that as an optional free service, right? So that could be the loan document preparation, or it could be the 1099-R if that is needed. For example, if someone's making a mega backdoor Roth contribution where they're first depositing the funds into a separate brokerage account at Fidelity or Schwab, and then moving the funds over either to a Roth IRA or to the Roth solo 401k sub account at Fidelity or Schwab. Likewise, if the value, or once the value of the plan exceeds $250,000 and a Form 5500-EZ would need to be prepared, we handle that as an optional free service. In other words, no additional charge. And we do that through the electronic filing system. So the brokerage firms are not providing that compliance support. So let's talk about the account establishment. So here there is a difference, right? So as you can see, there was, those were equal, right? Those are the same, Fidelity versus Schwab. Here, we've got some differences in some of the details, right? So with Fidelity, if the client already has an account at Fidelity, let's assume they have an IRA at Fidelity, then we would prepare the paperwork. We would pre-fill the paperwork that Fidelity would require to open the requisite number of accounts. And then that paperwork would have to be signed by the customer. They'll upload it back to us so we can review and compile to put it in good order. And if the individual already has an account at Fidelity, they can log in and send a secure message to transmit those documents to Fidelity. Otherwise, the documents would have to be mailed to the back office. Now with Schwab, likewise, we prepared the paperwork that Schwab requires to open up the requisite number of accounts. We put it on our secure portal. Clients download, sign, upload. We review and compile so the paperwork can be faxed to the back office at Schwab. So in Schwab's case, the paperwork can be faxed to the back office. And then Schwab will email the customer once the account has been opened up. Making contributions. So here's another difference between Fidelity and Schwab. So with Fidelity, they would allow someone to link their personal or business bank account to the Fidelity brokerage accounts that we're helping our clients open up for their plan with us, so that that individual could then make contributions electronically via ACH. Whereas Schwab, like many of the other brokerage firms, doesn't allow for an electronic deposit from an external account where the name on the external account doesn't match the name on the account at Schwab. In other words, say a personal account or a business bank account. So therefore, the individual would need to make contributions by wire, by mail, by check. Now, a workaround could be opening up a brokerage account in their own name, so a personal brokerage account, right, a non-retirement brokerage account, and then transferring the funds electronically, say from the personal or business account to the non-retirement brokerage account at Schwab, and then from there internally transferring the funds that the individual wants to contribute to the applicable sub account, right? whether it's a pre-tax versus Roth versus after tax. So funding alternative investments and distributions. So with Fidelity, you can write a check to transfer funds out of your brokerage account at Fidelity for your solo 401k plan that's provided by us. You can also wire money out of the brokerage account at Fidelity. But if you're going to wire money, the form to initiate the wire needs to be submitted at the local Fidelity branch. Whereas with Schwab, likewise, the individual can write a check to make an investment to transfer funds out of the brokerage account at Schwab, but they could also wire money, and that wire directive can be faxed to Schwab's back office. We've also had folks that have been able to log into schwab.com to issue a wire out. So those are some differences in some of the mechanics when it comes to funding alternative investments and distributions. So as mentioned, as far as the resource, we want to highlight that we go live every day in our community, mysolo401k.net/my community. We have a Zoom office hours style call at 1 p.m. Pacific, 4 p.m. Eastern. It's free to join. All are welcome. We also have forums where clients or community members are posting questions 24/7. We have our library of videos and webinars. We've got hundreds of videos and webinars in that library. So these are all great ways to learn, to share the knowledge, to see what other people are asking about. So please don't hesitate to join us there. And then, of course, there's other ways to contact us as well, as mentioned on the screen. We appreciate everyone participating in today's session. Please please subscribe if you're on YouTube. Please feel free to ask questions, as we want to take some time to go through some questions now. I'm in the process of applying for a solo 401k. I think I'm supposed to open a pre-tax solo 401k and a Roth solo 401k account with Fidelity. Do I open both if I'm planning to do a Roth conversion? So if you're planning to move money from the pre-tax account to the Roth account, then yes, you would need both. The money that's already in the pre-tax account, which could be, for example, money that's being rolled over from a pre-tax IRA or a pre-tax former employer plan, like a former employer 401k. In which case it would go from that external pre-existing retirement account into the pre-tax solo 401k sub account. And then if you subsequently wanted to move it from the pre-tax solo 401k sub account to the Roth solo 401k sub account, you could do that. There'd be no triggering event requirement. In other words, you could move as much or as little as you want. That, of course, is going to be taxable as well as reportable. So we have an online form that clients use to let us know about those types of conversions, so they can give us the information that's needed for us to be able to prepare the 1099-R. So let me bring up a couple of quick links on our website and help you digest some of that good information. Thank you so much for your good question. Here's one good link. And then let me give you another good link. Please take a look at those. As far as the tax credit, so in order to be eligible to claim the credit, the plan needs to include the automatic contribution feature. Certain notices have to be prepared and provided. The deferral election form would have to be completed. So we prepare all of that, right? The notices, the form, the plan is going to include the automatic contribution feature. Now, the vast majority of our customers would prefer to opt out of the default 3% contribution percentage. And under the rules, the participant, meaning you, the solo 401k owner, have to be given the option to opt out of the default 3% contribution percentage. But opting out of the default contribution percentage doesn't mean that the plan doesn't include the feature. It doesn't mean that the self-employed person is not eligible to claim the credit. Quite the contrary. In other words, there's no requirement to even make contributions. to be eligible to claim the credit. Moreover, opting out of the default amount would preserve the ability or the flexibility that naturally comes with the solo 401k. In other words, the solo 401k owner could contribute more than 3%, could contribute less than 3%, could contribute in whichever schedule or interval that they prefer, of course, subject to the contribution limits and the deadlines, etc. Hopefully that makes sense. Thank you so much for the good question. Thank you so much for the great participation. Please continue to participate. We certainly appreciate it. And like I said, we're going to be hosting, we continue to host these deep dive sessions on a weekly basis. We go live every day in our community. We have forums 24/7 where people are posting. So please subscribe so you get notifications of all the upcoming sessions. Please post any comments on YouTube. Thank you so much. I'm just about to open a new solo 401k account. I already have a Schwab brokerage account set up with margin trading. Presumably, I can't use this account because it already has assets. So no, you can definitely not use your non-retirement account for your solo 401k assets. You would have to have an account opened up under the name and the EIN number of the solo 401k plan. So as part of the establishment process, we obtained an employer identification number that's specifically for the solo 401k. And then we ask our customers where they want to have the new accounts at for their solo 401k. So you could say Schwab, in which case we would prepare the paperwork to open up the requisite number of accounts at Schwab. These are free brokerage accounts. Schwab doesn't charge anything to set it up. There's no maintenance fee. It's going to come with a free checkbook, etc. Hopefully that makes sense. Thank you so much. When someone borrows money from the 401k account, who benefits from the interest to be paid? So it goes back to your solo 401k. So it's not going to go to us. It's not going to go to you now. It's going to go back into the 401k account. So the principal plus the interest goes back into the 401k account. Hopefully that makes sense. Try to pull up see if I got a quick. Here's a quick video we did that's related to that good question. No, it's not set up under your business. It's set up under the name of the plan. So we have a quick 1-minute application to get started where we do need to know the name of your business. If you have a business or if you're a sole proprietor, that's fine too. But you choose the name of the plan. It's 2 words and the word trust. So that's the name that would be used to draft the 401k establishment documents. That's the name that would be used to obtain the employer identification number for the plan. That's the name that would be used to open up the account, say at Schwab for the solo 401k. Hopefully that makes sense. Well, you need to have cash, right? If you take a loan from your solo 401k, you're literally transferring cash out of your solo 401k account to fund that loan. So you have to have enough cash in there to fund the loan that you want to take. So it depends. If you have a pre-existing solo 401k at Schwab that was restated to our plan, we would, and when you submit the next steps questionnaire, which is linked from the initial email that's sent out when someone signs up, when we're sending a link to the establishment documents on our secure portal. So when someone signs up, same day we prepare the establishment documents, we send out an email with a link to the portal to access the documents. So from that same email, the individual will be able to go to our website where they can let us know where they want to have the accounts at. You can also let us know if you want to do a rollover. So you could submit that next steps questionnaire again, or for the first time, if you haven't done it, and you can indicate that you want to do a rollover, which will prompt us to reach out to guide you through the rollover process. But in short, if you are restating a solo 401k from Schwab to our plan, that would not be a transfer that would require a 1099-R to be issued. But if you're transferring money from a former employer plan to your new employer solo 401k, that would be an event that would require that a 1099-R be issued. Fidelity would need to report it as a non-taxable direct rollover, meaning code G in box 7 of the 1099-R. That would be issued by the following year after the date of the rollover. Yes, it is. Yep. That's going to increase money that's in your solo 401k. So some people, for example, have, given that the interest rate on the loan is prime plus 1%, with the increase in the prime interest rate, that means that the interest rate on taking a 401k loan is increased. So that individual would be paying more money back into their solo 401k at a higher rate. So after we close out the session, if you could go to YouTube to watch it. If you're on YouTube, if you signed up via StreamYard on our website, you'll get an email with a link to the recording. Hopefully that makes sense. Thank you so much for the great questions, great participation. We appreciate it. All right, until next time, please continue to participate. Thank you so much.